What's up, Outliers? I hope everybody's week is off to a stellar start. And today was a kind of a busy day in terms of trading, nothing too exciting. And we did do a couple podcasts today that were fun. I connected with Michael Gayed, and then I actually was supposed to talk with you, and today we connected quickly, but we had to reschedule to tomorrow. So if there is anything that you would like me to discuss with Ewan, your timeline to get those in has fortunately now expanded just a little bit. So if there is anything that you want to see me talk with them about, just let me know. Happy to grab that and take a look. All right, let's get me out of the way. I don't have our standard background here, but obviously I will give a voiceover for everything that's going on. And there's a little bit of market, I don't want to say continuation at this point, because we're starting to see the market basing. That's what I'm seeing. And today was kind of the first confirmation of that. Interestingly enough, the S&P 500 was up a little bit more when I saw the futures open yesterday. Then it was down. Then tech was up. Then Russell was showing a little bit of strength. So the market seems very much like it's trying to figure out which way's up. And this is going to be way too warm. So got to take this off. I was outside, so like this is perfect weight for outside, but not good weight for inside. As you can tell, my fucking skin is red because it started heating up. So let's take a look at a few things. I want to start us with, I guess we could do a quick portfolio overview. What do you guys think about that? We could do that. All right, so we still have TLT, no change in here. Although this is starting to dip down a little bit more than I want to see it. And this is starting to become a little more topical. Way too early to worry about anything in here. I'm not concerned with it to the downside still. My disposition overall remains unchanged. Nothing significant there. However, the part that I am genuinely curious about is how do we start to handle this 92 handle, which we undoubtedly are starting to creep towards. And the reason why that just handle is important to me is because, as you can see, at least here, we've been doing a lot of basing, and basing for a month, 2 months now. Yeah, essentially from the 16th of January. So we've just been clicking along sideways, which again, that's okay. But there are some implications of that in terms of the carry risk of the trade. And as you guys probably saw in the newsletter, which if you're not subscribed to, you absolutely should check me out on Substack. And it's Outlier Insights is the name of the newsletter. The reason why that matters is because when I look at TLT and when I look at what the thesis is for that trade against what the market is offering us, there's not great alignment. And what I mean by that, if we take a look at the Fed Watch tool, which I'll grab that for us, we could take a peek at that together. I had screenshots of this in the newsletter again, kind of because I really do think it's quite topical, at least with the way that the market is handling current rates and what Big Daddy J Powell is talking about. So if you take a look here, and there's still a 1% probability of a cut, which is kind of crazy. I guess they're just doing this as nothing is off the table, I suppose. But if we take a look at the probabilities, it's about as low as it's going to get leading into the release. So this is on the 20th, right? A couple days from now. What this indicates to us as traders is come the 20th, we need to listen very closely to what Powell says. You already know my thoughts on this. Doesn't matter so much what he does. The market already feels like they have a pretty good idea of what he's going to do. But the message is now the belle of the ball. That's what we're all looking forward to seeing. So I realized that I'm a giant asshole. I didn't say hello to everybody. So let's make sure we rectify that immediately. We have David, Shrey J. I see Joe, Tommy, Mr. Thomas Aranda. Yeah, okay, so Tom, riddle me this. Aranda, specifically, if you spell your first name Thomas, why is the short version TOM? Why does the H go away? How does that make any sense? That seems silly to me. Then we got Teachin, the Bark, and Tastas from Ireland. Yo, fun fact, we were actually looking very, very hard at an Ireland trip. We were going to do, I'll show you exactly what we were going to do. The game plan originally was to fly into Dublin and then take like the M11 all the way down here through Cork, through Killarney to, I think we were going to go out here also to Dingle for sure, because that's supposed to be a pretty cool spot. And then just continue following the coast through Limerick, back up here to Galway. And then I don't think we were going to go this way. I think we were going to come back over to Dublin this way. I think that was the original plan. But right now it's looking like that's probably not going to happen. And we're pretty between going back to Iceland because I found out that the volcano there is still going. And in case you're wondering why I keep touching the back of my neck, I got stung by a bee earlier and I don't know if the stinger is out, so it's still kind of going. So I keep trying to see if my friend, I feel bad. I like the bees. I'm not trying to kill the bees. And I know that as soon as that dude stung me in the neck, his life was over, which is unfortunate for him. It's a poor choice because like his sting was not going to thwart me. He's going to need a lot more of his friends. But anyways, we're looking back at Iceland or Norway still. Iceland looks, I love Iceland. We were just there last year, but man, the opportunity to see a live volcano, I haven't seen one. So that's kind of a problem for me. Labark says would love to check out Skellig Island's big Star Wars nerd. That would be cool. It's really, really cool. I think the issue, especially with the islands, is just from a travel perspective, they're not super easy to get to, unfortunately. So you kind of have to plan for that part, I suppose. Joe says, do make bees sting? Thought it was just female bees that did that. Oh, I think you mean do male bees sting. I thought that's a mosquitoes thing. Let's see. Do male bees sting? So it looks like yes. But it says drone bees, the males are larger and do not have stingers. And then the female bees and the queens can sting. Okay, so it definitely depends on the genus of the bees. So I think from a honeybee perspective, male bees do not sting. But so then that leads to the follow-on question of who are the ones out gathering the pollen? I guess it's the girls. This also says male wasps. Interesting. Well, learned something new. Whichever it was, it did sting me right square in the fucking neck. So whoever it is, I'm not very happy with them right now. But it's a bummer because they sacrificed their life for literally no reason. It's actually funny if you guys didn't know, there are different athletes from the arm wrestling world. I'm not an arm wrestler at all, but I have a respect for the sport because a couple of my friends got into it. And there's a dude named Devin Larrett. He's a Canadian guy, but he's super funny. He was literally getting like bee sting therapy for the inflammation to like help recovery to some degree, which I think is just very, very interesting. But he literally went to like this bee farm and had this dude stinging him in the hands and stuff with bees to help him recover, which is pretty wild. Let's see what you guys are talking about. Joe says premiums are sucking in TLT. Anyway, okay, let me finish this thought first, and we'll go to that. So the main thing I want to talk about here is, what is it? The June meeting. So the June meeting, we are still very much at an increasing probability of no change. And today it's like literally almost up to like 50-50, which is crazy. So this has gone from a 24% probability a month ago, now up to 44%, 45% essentially probability of no change. So this is, if this story continues, TLT, again, I don't have any significant issues with. That will continue to trend sideways, I believe. It might tick down a little bit, but I don't think it's going to start dropping too much below here. I think for too many of us, especially with the roadmap getting this close, it's too, how do I phrase this without being like hyperbolic? Not a certain thing. Markets are never certain. Very, very, very likely the case. As soon as we start to see Fed cutting rates, this will go up. And from a trading perspective, holding this while you're waiting for that to happen isn't the worst thing in the world, especially if you're holding shares, because you're getting a dividend, and bonds like this don't tend to want to crater too much without a specific impetus. And I think that that impetus is now gone. We're essentially just waiting now for the Fed rate picture to change. Now, again, this could go lower, but I think that's why you'll continue to see some pretty strong sideways action here. And I don't see much changing with that. Let's take a look at the July probabilities. Okay, so this is still overwhelming probability of an ease, but take a look at the move in no change. This is, again, nothing to balk at. It used to be 9%. It's up almost over 20% now. Paulo says these probabilities are inferred from treasury derivatives, right? You could, but you literally can just use the SOFR rate. So the SOFR rate has different periods that it looks at. This is using ZQ bonds, right? You can see that right there. But you can also derive this just from looking at the SOFR rate. And it's not, I literally was talking about this yesterday. It's not difficult to create these probabilities. I didn't start using this tool until I started like talking about this so much on these live sessions. So rather than doing the math and kind of walking through that for each one, I know that this is way more visual for most people, and it's something that most people can access. It's actually very easy to calculate these probabilities. It's just using the current bond rates. You can use different terms if you're so inclined, but yeah, you can also check out like their SOFR tool, so you can see like where we're at now, where it's going to be, and you can use this as well. But yeah, that's essentially right. LeBark says TLT is one of my buy and hold as a new trader while I learn options. Yeah, I actually think for, again, yeah, and this is actually exactly right. So he says buy and hold while I learn options. And obviously they're looking at the video on the best buy and hold portfolio, which is, if you guys aren't familiar, I can grab it for you real quick. It's just like a really, really simple concept. And the idea behind the best buy and hold portfolio is it is super, super fucking simple. You don't have to do anything with it. You can set it up, forget it. And then while your money is working, you can then learn the actual skill set. There's something really to be said about going slower to go faster, which is very difficult for just about all of us, myself included, to swallow that pill. None of us like that, but it is a thing. I had somebody in, actually, before I even tell you any of this, let me grab my, here we go. I want your guys' opinion here, because this is a post I came across on Reddit. And as per usual, I do my best to try and help people. Let me take a look. So take a look at this. And so this person says, I'm reading how prices are dropping. I have no idea what this stuff is all nonsense. I made a comment about this strategy, meaning are selling calls a safe bet at the moment, I think is what they're talking about here, not at the money, I think at the moment. So without reading my response, what do you guys think? How would you answer this question right here? I'm curious the way that you would kind of tee this up for a newer trader. Labark says, depends on what they need in their portfolio. David says, if thesis is falling, sell stock, not calls. Joe says, I don't understand the question. So Tom says, I wouldn't be selling calls as a new trader. I think a couple things. Okay, this is actually very interesting because you guys are answering this completely different, like literally completely different than the way that I think about it. So let's take a closer look then at what I'm talking about. The first thing is, are selling calls a safe bet at the moment? First, safe means nothing. This is a relative term that literally means nothing. What is safe? Safe this could be completely safe depending on their risk tolerance. This could be completely not safe depending on the risk tolerance. So this makes no sense. Again, like focusing on safety in trading, in my opinion, you're looking at the wrong thing. Next thing, all I'm reading is how prices are dropping. Again, this means nothing. Basing your trading decisions off of something like this doesn't make sense. Next thing, selling calls, safe bet at the moment because of this. Again, I wouldn't default to any set strategy because of some overall theme. What I try to explain to this person in my kind of long-winded response here is to think about what I talk to you guys about, this idea of a money-making mechanism. Because whether or not selling calls makes sense has nothing to do with if prices are dropping. It has nothing to do if they prefer to play the bull side. Like, none of this matters. What matters is whatever their thesis is and then fitting a strategy to the thesis. So in this case, I think that they're really confused. And then this is the other thing that I wanted to key in on. And the reason why I wanted to key in on this is because there's a handful of people in these comments. Here, let's see what other people said, because it's wild to me what people say. So this one says, this is Theta Gang where we sell options. In my opinion, selling still has the advantage. And like, it doesn't. It unequivocally does not have an advantage. If selling had any advantage, nobody would take the other side of the trade more often than not. Again, there's always overarching reasons why you might take the other side of the trade, but selling doesn't offer an advantage. So I think it's confused. This person's confused. And then when it says like, I don't think it's possible to predict the market or what any stock will do, this is also completely misguided. If you look at any sort of momentum style studies, like we can absolutely predict direction actually with pretty good certainty over long runs, aka positive drift, post earnings announcements drift, even sector rotation strategies, the window dressing strategies. Like there are tons of ways to accurately predict direction. This is kind of a problem that a lot of people that think that they're starting to get smart at trading fall into, where it's like, at first you think you know stuff and you can predict things, then you realize that you can't. But then you kind of resign yourself up here to where you can't predict anything. It's all random, but it's not. Like it's really not all random. Even think of something like volatility. Volatility is quite predictable. It will have movements that break your forecasts, but that doesn't mean that in the aggregate, it's not something that's predictable. So for example, if we take a look at something like VIX, here's a question. If you see VIX, well, let me zoom in a little bit more. If you see VIX right now go up to 23, what's your prediction? Do you think that it will stay up at 23 and go above 23 long term, meaning for longer than a year? Or is your prediction that it might go up there, cluster for a little bit, and then come back down? What would your prediction be? I'm seeing what the brave souls say. Second, David says go up, come back down. History says the latter. Bingo. Teaching says come down. Truck complaint says cluster, then come down. So it doesn't have to cluster, to be clear, but you guys are looking at it right. The fact is, this directional move is highly predictable. It's actually insanely predictable. It's one of the reasons why I like trading volatility so much. I have a volatility position on right now in VXX because I wanted long shares as compared to just trading the index itself. But again, the main point I'm trying to elucidate here is that it's very predictable. So if that doesn't mean it can't go higher though, that's the problem with predictions and forecasts. Because for example, here it hit 20, then it went all the way up to 85. So it absolutely went higher. No doubt, no argument, but then it came back down. Over here, it cracked above 40, but then it came back down. Up here, it cracked above 31, and then it came back down. So the point is you can absolutely predict that direction. The next thing, if I come out here and SPY, another forecast prediction-based question for you guys. Do you think SPY will be higher 24 months from now than where it is right now? So do you think the S&P 500 index ETF will be higher than 512 in 24 months from now? Joe says yes. Truck Complaint says yes. David says yes. So does that mean that it will be? Might not. It absolutely could not be the case. However, as a betting man, if I look across a 10-year block and we chunk this out into 2-year periods, so here's 1 year. This is kind of starting in, this is the end of 15. So we'll do, this is 15. About flat in 15, 15 to 16, flat. 16 to 17, up. That's a 2-year period. It went up. So now 17 to 18 is up. 18 to 19 is up still. So another 2-year period, even with this dip, it's still up. The point I'm trying to make is price direction is absolutely predictable. The problem is people want certainty with predictions. That's a problem. You're never going to find that. But as traders, we're not here looking for certainty. We're here looking for trends, observable trends that we can play out over time. That's how we make money. Paulo says, barring a brutal bull market, I think you meant bear there. But even if we look at a quote unquote brutal bear market, let's take a look at one here. So from 2020, we fell precipitously, but quite literally the same year, we were still up pretty big. Let's take a look at another bear market, which we all know happened in 22 to 23. 22 to 23, we came down. I actually don't remember what the return is for that year. Hold on one sec. I got to grab. Oops. Wrong thing. So 22, it was a 19% down move. Down, down. Okay? No problem. From there, if we look at where we dropped from the peak, guess what? Within 2 years, we're above that peak. The reason why I give you that 2-year period is because the average bear market falls short of 2 years, which is exactly why understanding how markets behave in the aggregate is actually a useful data point. Truck Complaint says, how long was the market down in 2008? So let's take a look. So in 2000, and it's really in 2007 to be clear, when we consider the start of the bear market, and I'll kind of show that to you. Let's go out further. So if you'll notice, we kind of pick the peak. So that's why we use that for the start. So the peak is like somewhere right in here, just before it started to trail off. Let me see if I can zoom in more. It's kind of not doing a great job, but hopefully you can see that. This section in here is 2007, and you can see we peaked right here, but then it started trailing down right at the tail end of 2007. So 2007, it went down to a maximum of a 51.9% decline, and it lasted 408 days. So looking at kind of various bear markets across timeframes, and the reason why I'm looking over here now is I have this sheet that has a bunch of this information laid out, kind of like a reference point. But looking from 1990 to 2020, there were 5 kind of significant down moves. The average duration was 265 days with an average down move of 36%. So that's from 1990 to 2020. So the average bear market, typically it's like a year and a half, I think is fair. Something, or I completely redact that, because with the new data points, that's going to have changed pretty massively, because it used to be like 298 days. And if I look at the data here, from 1930 to 2022, I see 25 overall bear markets with an average duration of 297.9 days, right? So 298 days. Interestingly, that number is declining quite a bit over from 1990. And now I obviously need to build this out a little bit more to include 2022, because right now this data set does not have that included, which we need, but that still also was not that long. So yeah, interesting. Joe says market days are real days. Well, both of those are real days, but I think what you're trying to say is calendar days, which is how we would differentiate that for those wondering. And it would be calendar days in those instances. It's not trading days. So yeah, all I'm trying to highlight here is that you absolutely can forecast what the market will do. Now, maybe they pick their word specifically with a prediction. There's a difference between predictions and forecasts, but nonetheless, you can even, I would argue, there are absolutely components that you still can predict. So I bring this to your attention because as these people are giving this person advice, this is kind of what they're learning about. Let's see. Will volatility expand? Yes equals buy premium, no sell premium. See, this is, again, another problem, right? Like, this doesn't make sense because this is a misguided understanding of options. The reason why I'm going through this case study with you guys is because as I see these different things online, different people trying to give people advice, which I think is cool that people want to help one another. Like, I really do like that. But the problem is people are getting so much shitty information from people that have half-baked responses. And I don't think that that actually helps anybody. Because again, like, for example, if volatility will expand, are you trading just volatility? If you're trading just volatility, then yes, you would want to buy premium if you think volatility is going to expand. Okay, fine. If you're not just trading volatility, delta will still overwhelm the Vega aspect to these positions. So you could have something that you think volatility will expand and you buy an option, whatever you want, buy a call, buy a put, doesn't matter. You buy an option and volatility expands. If you get a big enough move in your favor, the volatility expansion won't matter. Now let's look at the inverse. If you buy an option and volatility doesn't do what you want and it contracts and you still get a big enough move in your favor, guess what? Your option will still make money. That is what it is. The other thing with these broad platitudes of if you think volatility will expand, buy premium. What if I buy an option that's really deep in the money with not a lot of extrinsic value at all? Extrinsic value has the time remaining in volatility. That's what makes extrinsic value. So if there's not that much extrinsic value in an option, then if volatility expands or contracts, does it matter to me that much? No, it really doesn't. Hence the construction of my ratio diagonals. I'll get off the soapbox. The point, don't look at shit like this. We are supposed to be strategic thinkers. We are trading a tactical product. They're strategic investments. You can do a lot of things with options. So a big problem people have is they arrive at these half-baked answers and they're just wrong. This is good. Define safe. I like that. This person says, I have 100 shares of a few big tech names I sell covered calls on, and it works well. I also love buying an in the money SPY call 45 DTE. Like, I don't hate that. But one of the issues I see with this person, if you have 100 shares of these and you're selling a call, what are we doing? What's wrong with this? Why wouldn't I like this? Anybody have any ideas? What's my issue with this sentence? They're selling data to Google. Oh, you're talking about the Reddit IPO. Yeah, so the Reddit IPO is really interesting. There's a lot to that, which we can talk about in a little bit. But they do run ads. You'll see ads on their stuff for sure. I think one of the issue is they're going to run into problems trying to operationalize that, though, for like what Reddit is. One of the things that makes Reddit is that it's kind of like the Wild West. So they have all sorts of shit on here that might not be okay for a publicly traded company to then host. And I think that actually starts to kill what Reddit is about. So my guess is if Reddit goes public like that, there is going to be a replacement up very quickly. But we'll see. Tom is spot on. Tom says capped upside. That's exactly what I'm thinking about. LeBark says no diversification, which isn't wrong. They're just in tech. So I don't hate that, though. Like, if they want to be in tech, tech's killing it. I can't tell if they want to be concentrated or not. I don't care about that quite as much. But what I do care about is the fact that they're capping their upside on a thing that's been absolutely crushing it. Does that make sense? Maybe, maybe not. But the idea that it works well is silly, because if you do this long enough, I can tell you that they're going to be giving up a lot of profit potential. So works well, probably from their perspective, means that they're not losing a bunch of trades, which again, isn't looking at the right thing. They're not focusing on the right stuff there, in my opinion. Selling 4 to 10 out of the money call spreads. We all know I hate spreads. Indicators. Yep. There's my giant fucking word vomit. And get rid of that. So it looks like they're just talking about different stuff. No wonder so many losing options traders. Love that. That made a lot of sense. Yeah. So anyways, when I look at people kind of trading things and talking about these things, especially on Reddit, it's one of the reasons why I make sure to go in there. It's because I genuinely regularly find terrible information being promulgated. And I want to be clear. I'm not the arbiter of truth. I don't fucking know everything. But I'm very quick to admit the shit that I don't know. And I'm not going to pretend like, again, like a lot of those answers, they're very prescriptive, as if they know best, but they don't. And that's the problem. People want to answer the question for the person. And obviously I have a different take on that. I think the idea is to lead that person in the direction for them to answer their own question, because how the fuck could you answer the question for them? You're not trading for them. You have no idea all of the other shit that's going on in their head that's leading to the decisions that they're making. So it makes no sense to just specifically a question like that, like, is it safe? You have no idea because you're not them. Okay, I think I've now successfully absolutely obliterated that point. It was very frustrating for me to see. Truck Complaint says, any replies to your comment, Eric? Oh yeah, we can grab that. I think it was just him. Because by the time I posted on this, it was like pretty late. It had been up for a while. So he replied here, yeah, this. I have a sub $200 account. Yeah, like as you could tell, my response there completely switched gears. Just don't fucking do this then. You are going the wrong direction. And this is what I've been actually talking to you guys about. And this was kind of the start of this thought, but sometimes going slowly truly is going faster. So for somebody that's trading a $200 account, the only thing that they're going to do more than anything, blow up their fucking account. Truck Complaint says your reaction made my day. Yeah, it's just because I get it and I want them to be successful, but it's like They're just so far off base. Wild. Charles says Reddit IPO has meme status potential. What makes you say that? I'm curious why you think that. Let's take a look at any news about the Reddit IPO. Charles says low share price $10, easily affordable. Pros might pump it and dump it. Yeah, I could see that. Well, and there's also definitely the IPO release. That's actually another form of kind of market inefficiencies / phenomenon anomaly. You can trade that. But let's see. So citing people familiar with the matter. Okay, well, that's good. It's set to at least reach its price of 31 to 34 a share. So, Charles, I'm not sure where you're seeing $10 a share, but it looks like they're offering at $30-ish. So, in an amended filing last week, Reddit says it plans to offer 22 million shares at a price 31 to 34. The company's total share count would be 188.7, valued at 6.4 billion. Which is much lower than its previous. That's actually interesting. So they were going for 10 billion and now they're down to 6.4 billion. Whoa. Interesting. Charles says, oh, I thought it would IPO much less. I didn't see the 30 range, but still reasonably priced for an IPO. Well, just remember, like, that's not how IPOs work, right? Like, reasonable price doesn't make sense. That's actually a great question, though. I'm curious if ChatGPT can help us with this. What is the average price for an IPO stock offering from, let's call it 2000 to 2024? I'm curious if ChatGPT can pull this up for us. And in the meantime, let's see. So this was said on Thursday, it raised 410 million at 10 billion. Yeah, that's pretty wild. ChatGPT says, I wasn't able to find specific information. However, I found comprehensive statistics and charts for initial public offerings. This could be more useful. Yeah, give me this. Here we go. I have no idea anything about this website, just to be clear. I just want to see what they're saying. So between 2024, 6121 IPOs. No thanks. This is kind of annoying. I thought that it would give me like the average price. Because my guess would be something between 20 and 40 bucks. But that is just here we go. Here, let me export this. If anybody's a pro member, send me this file, then we can look at it. Otherwise, we just have to eyeball this really fast. Which it actually looks cheaper than my guess. All right, here we go. Let's see how fast you guys can read. 4, 4, 10, 17, 22 is the highest, 30 is the highest I've seen so far. 92. Oh, 92, real high. But there's only one up there, and I've seen 130 so far. 7, 5, 10, 46. 10, 23, 30, 30, 51, 20, 31, 41. I'm just kind of calling out the bigger numbers I see. Yeah, so the vast majority are 10 and under. Definitely under 20, I think, would be the majority count. But if you did it, you'd have to do like a weighted average. But I would guess it's actually pretty cheap. So yeah, in general, IPOs tend to be on the cheaper side based on, again, just eyeballing it. Let's see. Carl says horrible business model, but the thing has to do better than, let's say, Pinterest or Snapchat. I don't know how you could say that. I don't use Pinterest. I don't fuck with it, but Pinterest is smart, man, and they do pretty well. Let's actually see. What is their ticker? I don't even trade them. Pins. I mean, shout out to them. That's a good ticker. Pins. Yeah. I mean, again, it's so important to like modulate what we're thinking, because this is a massive peak during COVID, which I guess makes sense. Tons of people probably at home just doing COVID stuff. They have money from the stimulus checks that goes away. But even from here, they've been steadily growing, right? Like if you look at the earnings per share, 11 cents, 29, 8 cents, 21, 28, 53. So like even their earnings is going up pretty steadily. This, I would almost, I wouldn't remove it from a data set, but I would remove this from your opinion in terms of their valuation, just because I think this has been blown out from COVID and what happened during COVID with everybody being stuck at home. Just imagine how many users were probably on this thing during that period. So yeah, I think they're doing fine. They're definitely getting closer to whatever normal valuations might be for them. But anyways, the point there is just, you got to be careful saying stuff like has to do better than say Pinterest or Snapchat. I'm not sure that's the case. I don't use Pinterest myself, but Pinterest is also doing fine objectively. I do think let's take a look at Reddit business model. I don't know anything about this website, just to be clear. Let's see. I can't see shit. Unless you guys got superhuman vision, which I don't, but as soon as I try to blow this up, it's gonna get super blurry. Based on ad sales, sponsored posts, promoted content, promotes features through subscriptions. Because I think one of the things that Reddit does now that's a giant miss for them is there's not really a strong reason to sign up for their stuff. Like there's not an overwhelming, compelling reason. So they can change that. It's kind of what Elon Musk is trying to do with X. Elon is definitely changing that. Whereas before, for example, something like X, I still don't pay for it, by the way, just because it's actually really funny. I was talking with my buddy Joe, he's out here visiting, about this. There are some things that I have no problem balling out, spending money on as I want. Like this upcoming trip that we're going to travel on, we will absolutely go first class. Like that kind of stuff I'll spend the money on. But for something like Reddit or even like YouTube, I'm on YouTube and I don't pay for their YouTube Pro thing or whatever. But all of that is to say, for I think a lot of people, when you look at something like Reddit, most of us don't pay for it because there's not really a compelling reason to. You have access to everything you want, but then you can't really, there's no forcing function. Whereas something on Twitter, now X, I used to use that very frequently to reach out to people, to try to connect and send DMs to podcast guests and stuff like that. But now, because I am a peasant on X, because I don't pay for it, I can't DM people that don't follow me back. So now I just have to like throw a tweet out there and see if they see it. But the point is Elon is working hard to change their sign up model. And I think that's what Reddit would have to do as well. Because here's another thing we know is not true. The market capital is not 10 billion. It's like 6 and change. And profit is 170 million, revenue 350. When's this from? Yeah, like this right here. The fact that before Joe asked if they have ads, it tells you that the ad-free content isn't even needed. Because I agree with you. I know it has ads because I've seen them, but they're not intrusive at all. It's not overwhelming. They're not in your face. They're not even really that annoying. So, yeah. The other thing that Reddit would have to do in that kind of economy, if it changes to that, is for people that manage these big communities. If you think about it, even like our options, they don't get paid to moderate that sub. They just do it because they want to. So if Reddit gets to the point where it's going to start making a bunch of money becoming this kind of business model, there's a great probability that the current moderators that all do this shit for free are not going to do it anymore. They're not going to facilitate the communities, and they're going to demand to be paid. So I think in general, it's an interesting world. I'm very, very curious to see how this thing actually goes out. Revenue looks good though. I mean, look at this from 18, 19, 20. I mean, it's growing exponentially. I wonder what's, yeah, here we go. This, yeah, I was going to say it's got to be from advertising, the revenue. So they made 119 ad revenue in 2020. They made 181. It's a 52% increase. Yeah. And then in 2021, it would increase 44%, but it came down a lot to only 100 million. So I think this is a bucket that they're going to have to figure out. That's a big problem for them, I think. There's no real compelling factor there. It is interesting, though. Carl says maybe Reddit selling user data legally to AI companies can be lucrative. I'm sure they would do that. I mean, that's one of the first things I think about is all of the data that they can scrape and turn that into tons of stuff. Like, I'm sure that they're already selling all of your data. There's no doubt in my mind. But I definitely think that there's ways that they can ramp it up in a pretty big way. Interesting, though. Their EBITDA is actually slightly negative. Well, I'm curious what their overhead is. It's hard to tell because I haven't looked at their financial statements yet. But the thing that I think Reddit is going to run into a problem with faster than anything is that if you look at what runs Reddit, it's the moderators. The moderators aren't paid anything right now. So if Reddit is going to try to turn into a public company and then have to report out on financials on a regular cadence, what are you going to do with all of your unpaid moderators that are volunteering their time when they choose to say, you guys are making a bunch of money off this now, fuck you, pay me? I wouldn't blame them. So that's something that they're going to have to sort out. There's a good chance it turns into a similar Discord where you have to like pay to get into certain communities, because if you think about, David says stock options for mods. I doubt it, to be honest. And it's just because they would probably make way more money on the stock options. They probably just wouldn't pay them very much. Will Search says, why would they change their minds because it goes public? Because there's going to be a lot more rules that they have to follow. In order for, as soon as something goes public, there are a lot more rules that apply to that company, a ton. And there's also a lot more scrutiny on the operation of the company, how they're actually reporting their financials, all of that stuff. So as soon as the Reddit mods start to see that the company's making X number of dollars per year as it's getting reported out, there's a really, really good chance that a lot of them are going to say, hey, we're in these really big deals, the big communities. Because as you guys know, even with my Discord, I spend a lot of time, and I still have the help from a few like really awesome mods that help me out. But I spend a ton of time in there working with you guys to facilitate conversations. A community is only as good as its people and how active they are. So if you have a world where you have a bunch of lurkers, there's nothing there. There's nothing there. So if Reddit starts to change its business model and starts to become more strict or have different rules on interactions, it's going to become really difficult. Because if you think about platforms like X, platforms like YouTube, platforms like Instagram, people can be incentivized to not be lurkers. They're incentivized, if you choose to do this, to try to grow a following, to try to facilitate dialogue. So with something like that, you're incentivized to be active. But right now, Reddit, the main reason why people are active is because it's a good exchange of non-regulated information. It's just regulated by the mods. I think as soon as that starts to change, it's going to be a little bit different. Carl says $30 price tag with weekly options, most likely good premium and volatility. If spreads are tight, can be a good vehicle to trade. Anything can be. Yeah, I think we'll see what the markets look like in there, but I have absolutely no issue. Tommy says, What does Facebook do with moderators? Not sure, not on Facebook. I'm not big on Facebook, so I don't know either. But what I do know is that most of the good moderated communities on there are paid communities. They're people that are part of a Facebook group and they're in some other creator's universe of a paid community. There's a reality behind paid communities where if people are paying to access a community, they're inherently more engaged. They're more invested because they now have some skin in the game. They're putting money to something. They want to get what they can for the value of their money. If you put no skin in the game, then there's no real incentive for anybody. So if you take a look at those kinds of Facebook groups, I would bet dollars to donuts, there's not a lot of people in there adding a bunch of value, and it's probably full of fucking spam. That is the hands down overwhelming majority of instances, I bet. Joe says it's the controlling clout that's payment for the Facebook group mods. Yeah, but unfortunately, you can even see that, right? If you have Facebook group mods that are just in there for clout, what, again, even not applying my paradigm on thinking how crazy that is to give a fuck about fake internet online clout for a Facebook group. But more importantly, think of the quality of person that is moderating that group if that is indeed their incentive. So you're not going to find your way into some really high power community if that is the incentive. Humans are humans. And what motivates us is a really important factor when you think about stuff like this. Because who wouldn't want access to completely free, perpetually great, perfect information? I'm straight up with you guys. If I didn't have the Discord or the Patreon supporters that I do, I wouldn't spend a fraction of the time that I do in the Discord. I would still try to participate there because I really enjoy interacting with you guys. But again, like just from my own perspective, I would then have to apply the right value proposition to that because again, like just as valuable as your time is, so is mine. And so are the other people that are doing this stuff. So you have to figure out the way that people are incentivized and try to appeal to that. And that's actually, I'm very curious how Reddit chooses to do that. Like I'm very, very curious. You look at X, Elon Musk, he's paying people now to produce content on X. Even that whole Don Lemon stuff, I'm really excited to see that whole conversation. I've seen pieces of it so far, but he was going to pay Don Lemon, who's the dude from CNN. And in general, for those that don't know, Elon Musk isn't a giant fan of CNN, but he's still willing to pay this dude. It looks like I froze, but it looks like we're back online. So yeah, the point being is, a community is only as good as its people and how vibrant it is. That's a fact of how these things work. And if you have too many people that are disincentivized from regularly contributing, there's going to be problems with the communities. They're going to become dysfunctional and not worth really anything. If you have a bunch of people that are just sitting there waiting for somebody else to say something, nothing ever happens. Chuck Complain says, I think the anonymous part of Reddit has a part to play. It's massive. It's absolutely massive. The ability to talk on Reddit about everything. That's the other thing that Reddit, again, and I mentioned this before, that really is a giant benefit to Reddit, is the fact that they are unregulated communities to a degree. I don't know if there's like really bad shit on there, like the dark web. I doubt there's stuff like that because the front facing website or internet is pretty well regulated. So I don't think that would be the case, but you can still find all sorts of crazy ass shit on Reddit. And it's because it's not really regulated. Whereas if you look at a place like Facebook, they've had to really crack down because they're reporting to shareholders who have different ways they think things should go and different things that should be allowed or disallowed. And that's a constant fight for those guys. That's what happens when you go public. You have way more scrutiny. You have people to answer to. You have a board. You have shareholders. And your purpose changes from the movement of the organization for the sake of that. And it moves into what benefits the shareholders. That's what public companies have to answer to. So absolutely wild if you think about it. Like it really, really is interesting. All right, let's take a look at a couple other things real quick. So for those that don't know, and I think I've already mentioned this, but it is absolute. Oh, I think somebody mentioned something further up here. Somebody asked a question that I missed. I remember seeing it, but then I forgot. It was like a this or that. Here we go. Oh fuck, I can't say this. Dajan. Dajoun. How would you guys say that? What's your guys's approach to saying that name without murdering it like I am? Dajun? Charles says Dejan. See, Dejan is simple, right? So why couldn't you just be Dajon or John? See, that's Shrey Jai. I was in the same spot as you. Dejan with the Joun. That sounded like a yawn kind of thing. Dejan is perfect. Dejan. Yeah, we could do that. All right. So let me get back up here to your question, which is, do you use predicting alpha? If so, what are your thoughts? I do not use predicting alpha. I've talked to them a handful of times, actually. And we've talked about doing little things like maybe doing like a podcast or collaborating a little bit, but I don't use any of their stuff. I really believe in the autonomy of a trader. I don't really use a whole lot of tools, but I don't think that there's anything inherently wrong with their stuff. I just personally don't think that it adds a lot of value, at least just from my perspective. And I definitely like one of the affiliates I do have, ORATs. And again, this isn't sponsored by them or anything, but like I like their tools. I actually think that they're trying to innovate a bit. And then most importantly is you get access to market data, which again, as you could tell, going back to the theme I typically care about, which is putting the trader in the driver's seat, giving them autonomy to look at information that's not necessarily always curated for them, but to give them access. So yeah, I think when I look at tools, I'm very interested in that, especially when I look at it from the lens of, do I think this is something that would be useful to you guys? Something like that. Joe says, Eric cheating on milk, thought we wouldn't notice, but we did. Oh, get out of here. As if I would ever cheat on milk. Charles says, what is your capital allocation level at these current market levels, holding back a good amount of dry powder? Let's see. I can tell you exactly what it is right now. So right now I'm still 96% allocated. So I'm leaving a little bit of room for the Holy Spirit, but I am only 68% utilized. And that actually includes some intraday trades that came down today. So it will be less than that. So yeah, I have a lot of money right now that's not being used for anything useful. A big part of that is I'm in the process of rotating a bit so I can find. This is part of what I was talking about last, Friday, when I was showing you guys some of the scans that I'm doing. I'm trying to find things that are moving pretty aggressively. So for example, one of the things that I still am seeing is that sector rotation that we've been talking about. So the reason why that matters to me is because that still offers a very tradable event. The problem is the sector rotation approach is still going well, but it's just kind of slow. So I'm definitely trading materials and I'm trading energy. Both of those have been up over the last month, over the last 5 days, although today, both energy and materials have slowed down, materials more so than energy. So I am keeping risk on in those, but they're not moving that much. So I'm not putting a bunch of money in them because it's just kind of capital that goes there to sit and wait, which isn't what I'm looking for. And then Tom up above asked about Paul or Tyson. I have to be honest. I think in that boxing match, they it's an interesting matchup. Like if we think about it objectively, because Paul he's not a joke. He's been taking it seriously. He has good trainers. So he's not, people still try to relegate him to like a YouTuber, but he's more than that now. Like he very much is a boxer, but he's also very smart about what he's doing. I don't think he's any sort of like special boxer, but he's young and he does have a good group behind him. Mike Tyson, obviously, I want nothing more than to just blindly want him to win, and I hope he does, just because more than anything, I respect him and I respect his story arc so much. The only hope I really have for the fight is that Mike Tyson wants to do it. That's the main thing I hope. I hope that there isn't some financial piece that he feels obligated to do for his family or something, because that kind of sucks for him, I think. And I hope he doesn't feel that way, because he's at a point now where I don't want him to feel like that. The dude's had his whole life put out there bare pretty openly, which is brutal. That's not easy. Even all of the stuff about his history. And he's very introspective. He's a wise man. I like listening to him actually quite a lot. But that's the only thing I hope. If Mike Tyson wants to do this fight, then I love that, because it means that he wants to get back in there, box, which is his craft. And I love that for him. That's really the main thing I hope. I hope that he wants to do this. I hope that there's not some sort of forcing function. Joe says Tyson has brain damage. Someone should tell him not to. I mean, I don't know much about his medical history, so I can't speak to whether or not he has brain damage. But when I hear him talk, he doesn't sound somebody that's brain damaged to me, at least as of now. Hopefully he's not, but I don't know that much about him. LeBark says CDLX. Let's take a look. Charles says it's heavyweight class. One clean hit is KO pretty much at any skill level. Definitely. And that's kind of what opens up the conversation quite a bit, I think, because Tyson is still fast. Like I'm watching his training videos. He's not as fast as he used to be, obviously, but for a dude that's almost 60, like he's not slow at all. Like he's still very, very quick. So I don't think it's going to be a one-sided fight is really that part of it. I would love for it to be, but because one of the things that Tyson does do that I love about his style, he's very aggressive. And if you think about the people that Jake Paul has boxed so far, most of them have not been super aggressive. Most of them have been more cagey. They have a lot on the line, especially like the Tyson family. So it will be an interesting fight, because the one thing I do know about Mike Tyson when you see him go out there is like he has absolutely the right mindset to fight. Like Mike is no joke. Joe says Tyson net worth 10 million. Yeah. So one, you never know about those online net worth calculations. You really don't. It's just a number. But my underlying suspicion is that he has money, because he has his weed company, Tyson Ranch, and he's doing all these different podcasts. He can speak anytime he wants. So my underlying suspicion is that he has money, and I hope he does. He deserves it. He should have an abundance of it. So I agree. And my hope is that this isn't some sort of financial incentive thing for him. I hope that he genuinely just wants to go in there and fight, because that shit's cool to me. He wants to fight. I love this. If he feels pressured in any way, I don't love this anymore. We'll see. Charles says peekaboo style I like. Nice. Tyson's hallmark. Yeah. And it works for him because he's shorter. Tricky. Tom says anybody can get caught. I think if Tyson doesn't get the KO in the first round or two, then he's in trouble. Yeah, I also think that that's accurate, because if you think about most of his fights, they don't go that long. Yeah, most of his fights, even when he was still very active, they don't go that long. But he didn't look bad against Roy Jones during the exhibition, and I forgot how long that went. But I mean, it's not going to be like a full boxing match for these guys. At least I don't think. My guess is it'll be some sort of exhibition rules. All right, boys. Time for me to get out of here. Super fun conversation, though. I liked, blending a little bit of market talk with some other ancillary stuff. I love just kind of catching up and hanging out with you guys. Don't forget to like, subscribe, share, be an outlier, and I'll see you guys later.